ignorance is bliss, because once you know all the risks and you know all the challenges, generally you don't do anything in life.
Welcome to the latest installment of Fintech Founders. We're joined this week by an old friend from London, Rishi. Thank you so much for joining us today.
Thank you for having me.
Rishi, tell the audience, I'm sure they know all about you, but tell the audience a little bit about who you are.
That's a wide question. Where would you like me to start?
I know. Please sit down on my sofa on my couch.
I've never been.
We have 50 minutes,
I don't plan to go to one.
Let's start from childhood. Rishi, you grew up in where? In London, in India. Tell us a little bit about the early days of what Rishi was like before he became a famous entrepreneur.
I don't know about the famous part. A struggling, scrappy entrepreneur, sure. So born and largely brought up in London. Spent a couple of years in India when I was very young, but predominantly in London. I guess I was always somewhat impatient. So I started trying to figure out how I can try to how can I put it, game the academic process to get an accelerant. So I started doing things out of order in terms of whatever examinations and everything, to be able to accelerate getting into university, to accelerate getting out of university, to accelerate hopefully starting the process of business building.
When did you first kind of get the entrepreneurial bug or interest, or was it in school? Was it later? Did you come from an entrepreneurial family? Without asking you to overshare, I mean, a lot of people we meet who build businesses are second, third generation. They've kind of grown up at the feet of parents who are like deep in the weeds. Was that you, or did you just kind of come to it completely like, I want to do this? And
so my father, he is a mechanical engineer, and I watched probably from the age of 6 or 7 him effectively doing his day job and then trying to start and build his company in the evenings and weekends. And then at some point he left his job and moved to focusing on building his business. So I definitely watched the struggles of building a business, and given that he was actually very active in the Middle Eastern region in terms of various markets, including Kuwait, etc. And obviously at different times when there was turmoil, every time, it wiped a chunk of his business out, and he started again, right? And he did that again and again. And seeing the resilience, seeing the work ethic, inspired me probably from the age of 6 or 7 to say, I'm going to build businesses. That's what I'm going to do. So I would say from a very early age, I was very clear that that's where I wanted to go, and I wanted to hopefully add value in the world. But business building was definitely the goal. So I actually saw education as clearly a foundational step to that. I viewed my first jobs as continued education to actually enable the entrepreneurial path, versus viewing my first jobs as a career in itself.
And when you were either a kid growing up or through university in the first jobs, what was it that appealed to being an entrepreneur? Was it the sense of, this is my thing, my project? Was it just that innate desire to like leave a, what is it they say, like an imprint on the world? Or what was it that...
It was a desire to do something which was meaningful and had an impact in a wider sense. And my perspective was, that's something which, how can I put it? You can achieve when you're driving your own destiny, versus when you're a cog in a very large machine.
Right. And there you were, you'd come out of university, you'd accelerated through your studies, you'd worked at a big bank, ABN AMRO, GE Capital, and GE was a really big thing. And then you ended up setting up your own business via a family office. But you ended up setting up your own business. And how did that process go? And talk to us about also your co-founder, Joel. Like, how did you guys meet? How did you guys decide, like, in retrospect, all makes sense because, Harry hindsight, the whole offshoring wave, outsourcing, whatever you want to call it, McKinsey was pushing in the late 90s, early 2000s. All our juniors ended up, in places like India. And that, walk us through for you the early steps, saying, Joel, you and I are going to do something and we're going to build this that became, Copal.
Yeah. So, again, a lot in that. So, again, like I said, sort of leaving university, starting the first jobs, very much viewed as, how do I get as much experience and how do I have as steep a learning curve as I can, to be able to really, build more foundational knowledge on how businesses work. And I'd met Joel when we were both doing our masters together at the London School of Economics, and we kept in touch post the LSE. And when I was getting to the point where I was getting very restless in terms of wanting to make the jump to start a business, Joel had actually just come free of the commitment he had to the business. He actually sold his previous business that he was involved with, and we were like, you know what, let's spend some time together. And we were doing a lot of whiteboarding, or more accurately, white sheets of paper, because they were cheaper than getting a whiteboard. We sort of kept on coming back to both of our experiences. He had worked at McKinsey, I'd worked in banking, I'd gone through sort of, the analyst program. He'd obviously had experience of the McKinsey Knowledge Center, MCKC, as they called it at that point in time. And we were like, you know what? And I don't think I was a terribly good analyst, just to be very clear. I used to work crazy hours, right? But I don't know if I would have trusted my own comps, right? So I was like, you know what? I think the whole process and the way that banks actually put together that type of data and insight is just it's such a cottage industry, right? If you step back, it's like you could view it as a rite of passage, but then you sort of say, when we started in banking, you were working on a microfiche machine, right? And you go from microfiche to Excel, like no one sort of said, no, I'm not going to take things off the internet and use Excel. I'm going to go back to microfiche, right? So people are willing to sort of, move forward. So our view was, you know what, you can look at the whole workflow process of banking in a different way and make it significantly more efficient. And our view was that at that point, using India as a base was very well established in Y2K technology, right? But beyond that, it hadn't evolved that much, right? Because that was obviously the spike at that point in time. So our view was that, look, talent's clearly there. If we can make this work, it could be a really good small business, which could give us an okay lifestyle. And that was when we decided to start it.
So you were looking at just basically how, as you said, banking was, or in this case, investment banking / research, is a cottage industry, very artisanal.
Exactly.
And you wanted to industrialize it.
Yes.
And then talk us through the steps of, because, you'd met Joel in London, you'd spent most of your life, I think, around London, right? Greater London, from the little research I've done about you. And think Joel grew up in the US from a family from Latin America.
Yes.
I mean, setting up a operation in India and then in other places around the world, like Hong Kong, how was that like? I mean, it takes a lot of chops to, in your 20s or whatever, I don't know how old you were at the time, but to go out and do it.
26.
Rather than just go, I want to be promoted to associate or VP or whatever it is, and just get trashed in a London nightclub or whatever.
So 26 when we kicked the business off.
Yeah.
My parents thought I was absolutely crazy trying to go and start something in India. Right? They were
what
like,
was that first conversation? I'd love to know, like when you spoke to your dad.
I mean, they just thought I was totally crazy. I mean, you want to leave your job and you want to go and start a business and you want to locate the main office in India. Like
why do they think you were crazy? Because that was kind of what a life your ancestors had left behind, and the place.
No, it's more so that the rules of operating in India and executing in India were just totally foreign. Right? I mean, it's a different market, and it is much more different at that point in time than it is today.
Yeah.
Right. I mean, we're now 21 years on. So very, very different today than it was back in 2002. And they just thought, like, in a way, you don't have the muscle to actually know what it takes to execute in India, right?
Yeah. You were a North London boy, right?
Yes, there you go. So it's the great thing about being young and ignorant, right?
Yes.
Because ignorance is bliss. Because once you know all the risks and you know all the challenges, generally you don't do anything in life, right? So it's better to be somewhat ignorant, I think, in any entrepreneurial journey, right?
Totally.
You need to have, as I always say, you need to have an incredible amount of hunger, right? That hunger gives, and conviction, right? And you know what? If you got hunger and conviction, and you're reasonably, you're sort of playing in a reasonable area, you don't have to be playing in an exceptional area, you'll execute and deliver something, right? So it wasn't for the faint-hearted.
How were those early years like, building the business in India and then around the world? What were some of there must have been moments you thought, this is it, Joel, we've just got into something we need to pack up and go back to business school or whatever. I don't know what the plan B would have been, but were there moments like that, or was it always like, wow, this is it, we've caught the train, we're like,
if any entrepreneur says that to you, then they clearly weren't on the journey. Right? So I mean, I've never heard of that journey, right? They were probably one of those people who say they were a co-founder because they sort of, I don't know, passed by the office one day, right? So what was it like? I mean, let me give you the picture. So for the first 2 years, revenue was lower than the salary which I was used to taking. I would spend all my time trying to convince everyone that actually what we are doing is sensible, whilst obviously only having my own conviction and no data to back it. I used to start every day by biting my towel as hard as I could to effectively get myself ready for the day. And that gives you a picture of what it was like. It was tough sailing.
Were you married at this stage? Sorry to ask another personal question, but
no. I was married.
You were married, and I know you've been married. You've known your lovely wife for a long time, since
the age of 16,
school, I think. And what was she thinking? Was she thinking you've gone completely bonkers? Like,
well, she was paying the mortgage, so we were living off her salary.
Here it is, the secret of every entrepreneur.
Of course,
there's a partner with a steady job, right?
Absolutely.
Yeah.
So she was paying the mortgage. We were living off her salary, and she was supportive, clearly, because if she wasn't supportive, there was no way we could make it successful. But how can I put it? You have to when you're building like that, especially when you're struggling through, the 0 to 1 is always the hardest period of any build, right? So when you're going through that 0 to 1, you just have to make sure everyone thinks that what you're doing is great. As I say, even when the only thing you have is your own conviction, right? So she was incredibly supportive, and she enabled me to take the risks. But at the same time, it did require me to internalize a lot of pain, right? Versus sharing pain.
Fast forward a few years, you've gone through the 0 to 1, like you've run through the proverbial wall, and business is going well. In fact, it's going so well that you eventually exit that business for quite a nice price. I don't know if you want to talk about that here, but you exit that business to a large institution, and you're now thinking, let's retire to the beach. No, you're thinking, let's do something completely bonkers, set up a bank, right? I mean, the UK hadn't had a bank for I don't know how long, right? When you decide, just like, I can't even, I mean, I'm not a bank analyst anymore, but I used to be for 20 years. And building a bank is just like super hard. It's one of the hardest things out there. Did you know how difficult it was going to be to build a bank? Or was it another one of those, let's try it type?
Ignorance is bliss, as I said before. So, as I said, if you know too much, you would never do it, right?
Exactly. Like, so, you'd be sitting here on a nice comfy chair with a bookshelf behind you, pontificating, right?
So a few things in what you said. So, first of all, there was no question in our minds that we wanted to, sail off into the sunset. That's just not us, right? So
how old were you at that stage? Like, where is this, like 30s?
When we fully exited, well, we did a staged deal. So we were 36 when we did the first part of the deal, and then when we fully exited, sort of 39. So we had effectively we sold part of the business, then we sold the rest thereafter. So extremely clear though that we're in this to build, and the only thing in our mind was we've sort of come from here to here on the first business, right? The next business we want to be able to 10x, right? The outcomes, the impact, and everything that we have as an organization. So we want to do something which could scale to much larger degrees. So that was very clear. And it was actually an experience we had whilst we were building our first business, where we went to commercial banks to get some working capital, a line of credit, and we were unceremoniously kicked out twice. And then actually we went to your shop, Citi, who was one of our clients, into your special sits group, which is used to doing large deals for mid-sized to large companies. And they were like, you know what, we'll do a dividend recap for you. And we were like, what's a dividend recap? And they were like, well, you want debt as a line of credit for contingencies. Why don't you take 100 times the amount of debt you're asking for and pay yourself a dividend? And given that we hadn't eaten for however many years, right, we were like, that sounds like a very interesting idea. So that's what ended up happening. And given that experience of just how different the approach from commercial banks were versus an institutional desk at Citi, we were like, you know what, there's something broken here. So we were clear that, and then we met so many other entrepreneurs who had similar experiences or not being lent to by commercial banks. So we were clear that there was an opportunity. And then it was just a matter of how you're going to play it, right? Are you going to play it through trying to raise a fund or anything else, insurance company, bank, etc. And the bank sounded pretty outlandish, but it sounded like a pretty cool thing to do, set up a digital bank to solve this problem. Our view was it gives you the surest source of funding through cycle, right? And therefore actually probably builds the most, the strongest foundational business. And that's when we said, let's go and see if it's even possible and what it'll take.
What kind of years, I mean, this is like what, 2012, 2014? Like what's happening in the world, in London, in the UK, that kind of facilitates you to set up a bank? What's happening in this ecosystem?
So probably, I mean, it was somewhat, how can I put it, coincidental that Joel and I actually had this discussion, I think late 2013. And then a few weeks later, we actually saw the paper that the regulator, the FSA at that time, now obviously PRA, FCA, but the FSA at that time had released around breaking down the barriers to banking. And we read it with interest, and obviously going through the fact at that point there'd only been one new bank in 150 years, that they actually want to promote competition into banking. So we were like, okay, this is quite coincidental and serendipitous. So you sort of say to yourself, okay, let's pull this string a little bit more and see what happens, right? And then we start talking to people we respect and know, and some of our mentors, etc. And everyone sort of says that's actually a really intriguing idea. And you know, if you could pull it off, but it's setting up a bank, right? That's hard. How does one do that? So you know, you start rolling up your sleeves and you just basically go and pull out the rule books and sort of see like what it would take. So I would say the environment in the UK was one which was very much about promoting competition, actually promoting technology, and specifically Fintech. The regulator sort of starting to think about how do we actually bring in more innovation, etc. So I'd say it was a very opportune time to be in the position that we were.
I'd love to talk about building OakNorth, but I want to bring Gaurav into the conversation as someone who's built businesses. I think he'd be better at handling this part of the conversation. So Gaurav, over to you.
Thank you. Thank you so much, Ronan. Rishi, it's been super interesting, you know, all these key foundational elements you keep bringing up in the conversation. You know, you've had experience, you've had foundational knowledge, you've built a business before, you've done an exit, which is, you know, it's fantastic, and then you're going back at it again. You know, could you just first of all just tell us what exactly is OakNorth? Tell us what it does. What is OakNorth? Run us through that.
Sure. So OakNorth is a digital bank which is focused on supporting what we term the missing middle. And these are really, if you look at the overall sort of economy, you've got your consumer market, you've got your small business, you've then got something in between, and then you've got corporates. The something in between doesn't actually have a very good name, right? And that's why we call it the missing middle. So what ends up happening is that if you're a company, if you're a consumer, your whole experience, your financial experience has evolved a lot over the last decade, right? If you're a micro business, less than 5 or 10 employees, again, your experience has evolved pretty much in line with your consumer experience, maybe with a bit of a lag, but thereabouts. If you're a medium or large corporate, you have great guys like Ronit's institution, etc., and their peers all over you, supporting you, providing whatever you need. If you're a company in the UK, US, which is sort of between 1 million and 100 million, right? So you're sort of you're not a mid-size or large, but you're not a micro business. You just don't get service very well. So for us, it's all about how do you actually service that missing middle? How do you enable that group of businesses to prosper? How do you provide them the funding they require to actually grow? And I would say that that category in most economies is actually the largest driver of GDP and job growth, and therefore a really critical part of economies. So in short, OakNorth is a digital bank focused on supporting the missing middle to enable them to effectively prosper.
And how many years have you been building OakNorth for, and how many countries are you present in?
So we launched the business in September 2015. We got our license then and launched activities. OakNorth Bank is only active in the UK today. So we have, over those 7 years, we have lent about $10 billion. Wow. And current outstanding balance is just shy of $6 billion. And we've helped generate about 37,000 new jobs in the country, and also the creation of over 26,000 affordable homes in the country. So I would say that our impact into the UK has been at least material. So we focused on the UK because our view is that you build, and you build deep, and you build strong in one market before you go to many markets. There are the nature of this business is different to our previous business. Our previous business, you got one client, and that client took you to multiple countries. With this business, it is all about servicing domestic businesses and helping them prosper. So we're at the point now where we're contemplating actually putting the next geography in play for OakNorth Bank. What we also have is we built a lot of our frameworks around credit in this space into a product called OakNorth Credit Intelligence. And that product is clearly what we use ourselves to power our approach to lending, and also to managing customers. But we also do license that to US banks. So we also have an operation in the US. And there we've got about $440 billion worth of US lending on that product today.
Wow. You know, if you can tell us more about that early years of the business, balancing out building a company and talking to investors. Did you have an advantage because of your previous exit, where it was very easy to get very long-term funding and you could carry on building your business and be on your merry way? Or did you have to do several rounds of funding and building product at the same time? Could you tell us about that history,
Sure.
That journey?
So let me do a little bit of, how can I put it, contrasting the experiences of the build of Copal versus the build of OakNorth in that regard. So when we started Copal, we put in the very little money that we had ourselves, but we also then raised from some friends and family, and we raised the royal sum of about $250,000. And we used about $60,000 of that to build the business into a 3,000 person company. So we bootstrapped that in a way which is, how can I put it? As I say, we were sort of, we were bleeding from our fingertips, right? In terms of how we grinded through that business. Okay. When we set up OakNorth, obviously you have the licensing process first. And if you don't get the license, guess what? You can't start the bank, right? You can start a different type of institution, but you can't start a bank. And our view is that therefore the very first capital should be our own capital. So we put in a good amount of our own capital into the business. And then we started just speaking to friends and family again. And we said, on the basis that we do get licensed, like, would you like to invest with us? And surprisingly, we got a lot of very quick yeses. and raised, I'd probably say about 30 or 40% more than we were expecting, right? So we said, okay, that sounds good. Let's take her. That was the first round. And then thereafter, and again, go back previous business, we probably raised $250,000 to build the business. Over the various funding rounds, we have probably raised about $800 million, or abouts, in terms of equity. And let's be clear, today we're sitting on about 1.1 billion of equity, right? So we've accreted, we've paid back all accrued losses and accreted value, materially above, the invested capital. So the future rounds, yes, absolutely, multiple future rounds, right? To get to those types of numbers. The build business, raise money equation, I have to say that, look, our original business plan, we unusually smashed through it very, very quickly. So actually, if you have a look at where we were by year 3, we were probably at, at least 4x of what we had projected to be at.
Oh, wow.
When we put together our initial business plan. And it's somewhat, it goes, Gaurav, to one of the points you were saying earlier. It's sort of when you set up a business, you sort of think what clients want, you think where the pain point is, you think where the value you can add is, but you never really know, right? The only way you really know is if you actually do it and you see, clients wanting what you're providing, right? Yeah. Everything else is at some level an extraction away from reality, right? So once we were on that path, it then became, I would say, somewhat, it was somewhat easier to raise capital. It's never easy to raise capital, let's be clear, never, right? But we had some wind behind us, and we were lucky.
One of my biggest pet peeves, is people are very happily, it's just too easy to throw a statement out there saying that, oh, I'm building a digital bank, or I built a digital bank. I sit on the board of a bank. I've been part of banks in different countries in different spaces when they're in ideation stage to Series A funding and Series B funding. It's a monster of an effort, and it's beyond your fiduciary duty as a founder to your shareholders or your investors. You're building a bank. Your fiduciary is to your customers beyond your level of expectations and what the standards you're held to and regulated is it's a huge undertaking. Now, when you're setting up a bank, and again, it just annoys me that people throw it around like that. The reason I say this is because there are a number of companies out there that are actually not building banks. They're operating banks, but they're taking the technology or platforms from pre-existing ecosystems, right? Mm-hmm. So they're really operators trying to find a business model that they believe works. Are you building your technology from scratch? So are you not only building the thesis on which you're serving as a bank to these customers which are underserved, but are you also building the technology from scratch? Because that's a huge question to ask, right? You have investors who are looking for returns. You're trying to service a segment. If you don't have the technology skill sets, and it's a bank, that's a lot of technology expertise you need to have, and compliance expertise you need to have. It's not an easy undertaking. So which path did you take as OakNorth? I'm super curious. Did you take, I'll take something that's existing out there and make it better and own it myself, or did you build everything from scratch?
So it's a really interesting question. And again, a lot in that.
I wasn't going to make it easy though. Put me here for a reason.
There you go. So let me give you a few different angles on this. The first is, we're probably going through our third refresh of our tech stack, and we've been around for 7 years. Okay, so that gives you a sense on, number one, how we think about technology. Okay, I would say that what we started with was an IT mindset around quite a bit of our tech stack, and then a perspective around, let's purely invest our own energy to build credit intelligence, so our own credit product. Okay, because we viewed that as the core secret sauce. Okay, then somewhere on the journey, we said to ourselves, our core isn't working for us for lending, so let's build our own core lending, which we started doing probably three and a half, 4 years ago, something like that. And now we're effectively taking a full product mindset and refreshing everything, right? I mean, I wouldn't even say refreshing, I would just say rebuilding based on a full product mindset, right? And when you build, I mean, on when you build anything today, the optionality in terms of other SaaS providers is so strong that actually it makes no sense to go and rebuild what is available as an exceptional third-party product. It only makes sense for us to go and build if the third-party offering is not strong, and or we feel like we have competitive advantage in some way to build something different. Outside of those two things, clearly you have to own the whole UI experience, right? But in terms of what you plug in underneath, I mean, in my mind, in our minds, it just makes no sense to be purist and say you have to build everything when, you know, it's like theoretically, as I say, you could go to the point of saying you need to build your own cloud infrastructure, you need to build your own hardware, you need to build, you know, it makes no sense, right? So it's fundamentally you buy what's available in terms of good SaaS product, and you build where you got competitive advantage. And again, I would say our core competitive advantage is credit intelligence, and I would say there's a massive difference, as both of you know, in terms of building with an IT mindset versus a product mindset. And I would say that, again, we've probably been on that journey for the last couple of years in the bank. We've always had that approach in credit intelligence, but that's been a little bit of our journey here.
Gaurav, can I jump in here? Just I wanted to, Rishi, could you just unpack those 2 points a little bit more, please? Particularly for the audience who've not followed you closely. Point number one, credit intelligence as a USP or an edge. What does that mean? Point number two, I think most people will get this, but again, let's state the obvious, product versus tech mindset. And maybe bleeding out of that, how you compare to all these neobanks that have been built around the world in the UK and the UAE, because I think that kind of answers that second question as well.
Yeah, absolutely. So credit intelligence is a product which we fully built internally, which really takes a lot of our frameworks around how we think about analyzing companies, underwriting, monitoring, etc., and embodies that into a SaaS product, which enables one to do that, you know, efficiently, effectively, at scale. So that's what fundamentally powers through OakNorth Bank. And as I mentioned, we also do provide that to other third parties, and that is a SaaS product. So that's credit intelligence. In terms of the difference between it,
how does it work, Rishi? Like, why does ABC Big Bank or XYZ Neobank not have that as well? What's different or special?
Yep. Sure. So when you look at the way that automation has been driven into credit, it's really been driven in the consumer and small business space, where you have large data sets. Each decision isn't that large, and you take a statistical approach to lending. So you have an incredible statistical rigor on lending, and then you have, you know, a reasonable amount of reliance on applying those statistical frameworks onto credit bureau scoring, which again is driven statistically. When you look at sort of corporate lending, larger corporate lending, it's driven by generally lots of smart people huddling around and spending a lot of time analyzing companies, building financial models and the like. In the commercial space, and that's missing middle in between, you don't have the ability to put the same number of people on because the deal sizes aren't so large, the cost just is disproportionate to do that. And you can't take a statistical approach because there's just too much idiosyncrasies within each borrower. So what we're doing is we're effectively taking the statistical approach, which is applied to the consumer space, combining it with the analytical rigor, which is applied in the corporate space, and meshing those two together to actually make it apply for that missing middle. And that's hard to do. I mean, for us, this has been a 20-year journey through building Copal, learning about financial analytics, learning about credit, learning about large cap credit, learning about how do you move that from being a cottage industry to one which is actually much more process-driven, scalable. How do you think about those processes? How do you think about then adding technology, the advances in big data which have happened during that period? Putting all of that together is really what formulates credit intelligence. And why, you know, why don't big banks do it themselves? It's quite amazing because you spend time with you know, pretty much any of the larger banks. They've all sort of thought about how they can actually drive more efficiency, etc. But most of them are still doing what they were doing 20 years ago in this space, right? So they just haven't. It's just hard to move it forward. Yeah. So should I go on to the next
please
point?
Product versus tech and
sure.
versus other neobanks.
So look, an IT mindset is fundamentally you've got functional business areas, and those business areas, then there's an IT group, and the IT group builds and develops for those business areas, and the business leaders or people in those groups sort of decide what's needed, and then, you know, functional specifications are written in a waterfall approach, and then things are built. Once you've got a large piece of build, you then put it out and you deploy it, and hopefully it works, right? The product mindset is you have a product manager and you have engineers. They work in a small team, a small squad. That squad spends, the product manager spends 40, 50, 60% of their time out in the market, understanding the exact customer that you're targeting and the pain points and what they view as value add. The engineers also potentially spend time in front of the customer, spending time understanding those points. And then as a squad, they don't spend like countless weeks, months putting together process diagrams and putting together functional specifications. What they do is they just start coding, and you get a really thin layer of code against the use case, and then you start putting that in front of customers, and then you start building on top of that, and building and building and building. So effectively, you are building with the customer as the end customer, as your contingent, and you're learning from them. You're iterating off them. You're putting thin product out and keep on building. You're deploying maybe 20, 30, 40 times a day in terms of like new deployments, right? So it's just a totally different motion from we'll do a release every quarter, and we'll cross our fingers and hope it works, right? So it's I mean, again, very, very, very well established methodology in terms of the product mindset. In tech firms, in banks, generally not.
I know we're coming to the end of our session, but I think Gaurav had one or two final questions before we wrap up. So back to Gaurav. I think we've got 5 more minutes. So
thanks a lot, brother. I do indeed. This is hyper interesting for me personally from a build cycle, because it's a mature business. It's not an initial business that's trying to find its feet. And I think one thing we've said this before, Ronit, on several, and I know this is only podcast number 49, but we've said before, right? Technology for the sake of technology does nothing for nobody, right? And I think that ethos goes through whether you're starting out or you're moving forward. But coming back to your story, Rishi, about where you are right now, you've broken through a space, you're dominating, you're growing, and then eventually you're looking at expanding into another geography. I don't think we have time to even start talking about the challenges of moving into a different geography, cultures, business, mindsets, operations of something that you're doing just yet. So we won't touch on that, but that's maybe another podcast later. We'd love to have you when you do that geography. Ronit, maybe you can vouch for this as well as something that would be interesting. But if we look at the product lifecycle that you've got going now, you're in a space which is very unique. And when I mean unique, I'm talking about other people like you who have been doing something in credit information and credit intelligence, like Tala, for example, in Africa, that has got access because they built the credit system. They have access to that, book, trends, knowledge, cycles, people, cultures, locations, businesses. They have that data. Banks don't have that data. Governments don't have that data. Tabby in the UAE, which has built up, probably has completely different data now from their intelligence engines compared to people who do traditional credit card issuing. Or even those people who are doing credit card issuing might not have access because they're doing it in a fragmented space, whereas a customer is doing it very extremely focused on the individual across all their spend, not just maybe across one card, but all formats of life. And the feedback they're getting is probably tremendous, as well as they're building out that information set. You're at that stage, I imagine, if you're going to move into another geography where you've got excellent credit intelligence. At what point can you reach a peak of building product and revenue points where competition catches up with you? Do you think it's going to reach a plateau over a 5 or 10 year horizon, or is it just endless for building out revenue products on this key data that you have? Or will people catch up at some point and the business evolves into something else in your dominant market?
So I think, look, I think the cycles, business cycles are significantly shorter than they were, right? So if you as an organization are not evolving the business, I think inevitably you get competed away over a period of time, okay? However, if you just stay focused on the customer and what are the customer's needs and how do you continually add value to the customer, and that's where you're focused versus what a competition doing, that's how we drive ourselves, right? So in terms of like what else could we be doing, there's a lot we could do with the data sets we have, right? All in the service of enabling our customers to do better. So that's how we think about it. We will continually evolve. Because
can you give us a hint or a little bit of a snippet of something that's coming down the pipe that people can look forward to as your customers without revealing too much? Is that possible?
I mean, it's always more fun when you do it. It's always more fun to sort of, do and execute.
I tried, Ronit. I tried.
We're out of time, so we have to wrap up. But maybe one last question with one word or a one sentence answer. Rishi, if you had to do this all over again, would you build a bank or would you build something else?
I would do exactly the same.
That's all we needed to know. Thank you so much for joining us.
Thank you.